In this video, I'm going to show you gold, silver, and a fresh look at using diversification to avoid bad results.
Welcome to Silver Heist. Thank you to our returning subscribers and guests. We are a channel that likes to hold physical gold and silver. To support my creation, please subscribe.
So many of us would agree that diversifying with silver and gold together is better than holding only one of them by themselves. Although some really like one over the other. So everything has its strengths, but everything also has its weaknesses. But by building layers of similar but different things, you can lessen the risk or minimize the wild swings by combining one stable thing with something that's a little bit more volatile. And some, not all stackers, also like to diversify their metals with stocks. So stocks for growth, but metals to complement those. This would diversify by combining two things that are opposite, where one might be strong, at the same time the other might be weak. And so they complement each other that way. So besides the long-term prospects for gold and silver, 2021 is showing some inflation or increases in commodity prices as the US and the world economies are ramping up production. So with the mine closures of 2020, and they've created some shortages in metal productions, so a shortage of product and an abundance of money leads to inflation. Until the mines fill the pipeline with new metals, there could be tight supplies for silver, platinum, gold, other commodities including copper, and even uranium. So gold, silver, commodities, the mines, inflation, the economy, I think they're all tied together. So I like to read and try and understand as much as I can. One of the most important components of our economy is energy. If I showed you something really compelling in the next 1 minute, would you then stay to the very end? The number of employees needed to operate a power plant varies wildly by energy type. So I'm going to show you some representative plants. The blue square is the number of employees, and the circle is the megawatt capacity. So this was published in the Wall Street Journal. Solar, 250 megawatts and 5 employees. Wind, 400 megawatts and 15 employees. Natural gas, 627 megawatts and 22 employees. Coal, 600 megawatts and 125 employees. And nuclear, 838 megawatts and 600 employees. Consider the societal benefits to an energy source that creates ongoing jobs. This video is sponsored by Uranium Royalty Corporation. They are the first and only pure uranium royalty company with the ticker symbol URC on the TSX Ventures stock exchange in Canada and the United States. They are known as URCCF on the OTC. As the world is heading into a super cycle of inflating asset prices, the company URC is positioned for an even more intense uranium supercycle. Recent stories in the Wall Street Journal and mining.com have highlighted the renewed positive prospects for uranium. The U.S. currently imports much of its uranium, but with the strategic importance of electricity and the future needs of the U.S. Navy's nuclear-powered ships and submarines, there is a desire to get the U.S. mining operations active again. Here is a chart of all the diversity of the New England electricity sources. The chart goes left to right from 2000 to the year 2019, with the blue natural gas on the top and the nuclear, the stripe right underneath it. And nuclear has been a consistent contributor. Beyond the consistency of nuclear power, one of the strengths is the amount of heat you can extract from uranium to spin the turbines compared to coal. A 1,000 megawatt coal plant uses 3.2 million metric tons of coal, while a nuclear plant would use 24 metric tons of uranium. So the cost of nuclear power generation is not as price sensitive to the fuel cost, primarily based on the volume of fuel that you actually need to use. Perhaps the biggest strength of nuclear power is its reliability 24 hours a day, 365 days a year. Solar generated electricity is great, but can only give you power during the daylight hours and only when the skies are clear. So in this diversification scenario, nuclear is the stable foundational building block, and all the other sources fill in the blanks. There are newer, safer, simpler nuclear plants being designed and built with more passive, gravity-fed emergency water designs instead of pumps, and smaller modular nuclear designs. A recent Bloomberg story shows that the White House has a commitment to nuclear power as a clean power source. The future needs for uranium supplies are looking good, and so URC wants to fill that need. And rather than mining, they want to support the industry. So the Ames Shovel Works supplied the California gold rush with shovels and picks, and they did very well for themselves. So URC wants to supply capital and to serve markets with the uranium supplies itself. As a royalty company and streaming company, they enter into contracts with the major mining companies in friendly countries and supply them with capital in exchange for cash or uranium deliveries in the future. So when the mine produces the uranium, URC will have a contract to get paid a royalty on that production as a stream to take the payment in the form of some of the uranium itself. So I think the payment in the metals would allow them the upside of future spot price increases. So some of the investment highlights from Uranium Royalty Corp. They have first mover advantage. They're the first company to apply this royalty and streaming business model exclusively to the uranium sector. They have $38 million in cash or listed securities. So they have a strong balance sheet, which allows them to capitalize on uranium royalty and streaming acquisition opportunities as they present themselves. They have physical uranium ownership by owning 9.6% of the shares of the Yellow Cake Corporation. URC holds interest in physical uranium, and it was acquired at cyclical lows. They are developing, and they already have a large and diversified royalty portfolio of past and present producing uranium projects in multiple jurisdictions, and they have expertise and management and board members who have decades of uranium industry experience, including senior executive and advisory roles to other prominent companies and governments in the sector. So I'm not a financial advisor. Information presented should not be interpreted as advice to purchase this stock. Any stock carries risks, so please do your own due diligence before making any investment. I will have a link to the company website in the description below, as well as the ticker symbols. So thanks for watching.